Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 18th of July 2020, and we're publishing our gold and silver weekly update for the week ending the 17th of July. Now on Thursday we published a video entitled Gold and Silver Prices Fall as ECB Holds Rates and Slows Bond Buying. Then on Wednesday, Trade with China, Principles versus Profit, as silver reaches $19.37. And on Tuesday, silver exceeds $19 as global economic data disappoints. All of these videos actually give you a regular update of what has been going on in the week. Now, for the whole of last week, gold rose $11. From $1,799 to $1,810, having hit a high of $1,815 and a low of $1,792, a rise of just over 0.5%, in fact 0.6%. In sterling terms, gold finished the week at £1,440, that's up £14. And in euros it closed at €1,584, that's down €8. The reason for this being the relative increase in the strength of the euro, primarily because the ECB held rates firm and didn't lower them as many expected. Silver rose 62 cents from $18.75 to $19.37, having hit a high of $19.50 and a low of $18.75, a very healthy rise of 3.3%. In sterling terms, it closed at £14.40. That's up 55 pence. And in euros, it closed at €16.95. That's up 0.36 euros. The gold to silver ratio fell again this week from 95.9 to 1 to 93.4 to 1. And it's now balancing quite nicely within our predicted range of between 90 and 95 to 1. The Dow Jones closed on Friday at 26,671, down 62 points on the day, but up 596 points on the week. The S&P 500 closed at 3,224. That's up 9 points on the day and up 39 points on the week. And the Nasdaq performing not quite so well for the week, but had done so the previous week. It closed at 10,503, up 29 points on the day, but down 114 points on the week. Now, Brent crude closed at $43.14, down just 10 cents. And WTI crude closed at $40.59, and that's up 4 cents on the week. So really, virtually no change. The dollar index stands at 95.94. Now that's down 0.71 points on the week. And it has held quite persistently above 96, but failed to do so on Friday. Now we concluded last week's update with the following words. So what do we foresee next week? Well, frankly, more of the same. Perhaps a slight pullback early next week, but gold is now firmly in the $1,750 to $1,850 camp. And silver has actually stretched its limits, now in the $18 to $19.2550 camp. We then raised our outlier limit to the $19.50, even though many were predicting $20 silver. And even the Silver Institute has stated that we shall see $21 silver in 2020 before the end of this year. Now, gold has clearly kept within those limits, but silver is constantly attempting to reach to and then break through the 1950 level and has outperformed gold, as shown by the fall of the gold-silver ratio, as mentioned now within our target range of between 90 to 1 and 95 to 1. So, with gold generally performing in a relatively nondescript manner last week, one has to ask, has it now run out of steam? Well, what was interesting to note was its significant pickup on Friday. Yes, most of it was admittedly caused by the fall of the US dollar, with the dollar index closing below 96. But we have to note again that we are close to 8-year highs, in the US gold price, and the $1,850 level is most enticing indeed. Now, from a technical point of view, there is support at the 10-day moving average of just above 1,800, and a fall beneath this level will be further supported just above 1745, 1746 to be more precise. Resistance is seen near the $815 level, which represents July highs, but we're still of the opinion that 1,850 will be tested soon, even if it's not this coming week. Medium-term momentum has turned negative, with the MACD providing, though, a crossover buy signal. Now, housing start figures for June were much more positive than expected, with an increase of 17.3% and with some 17,000 more units being built than the market expected, or at least started. We reported on Thursday that jobless claims, although improving, was still quite high, but retail sales showed a positive 7.5% growth in June. Industrial production figures were also up in June by 5.4%, compared with 1.4% growth in May. It is partially to this end that we've seen silver outperform gold. We've stated for some considerable time that silver will lag gold until the economic picture improves and the industrial demand for silver increases. This appears at least to be occurring. Also, we cannot forget by any means that investors are now moving into silver via ETFs and the COMEX in some reasonable number, as the gold to silver ratio was somewhat out of kilter, which needed at some stage to be addressed. And it appears that this is what's been happening over the last couple of weeks. Now, last week was another strong week for silver, and whilst there may be some short-term corrections, its sights are certainly set on $20. Now, we produced last Sunday a video highlighting that the Silver Institute has forecast $21 silver for this year as its high, and this actually reiterates and reflects our prediction in our video we produced back in February, predicting that $21 would be the peak for silver this year, though we did suggest that providing Trump wins the election, that price will fall back a little more within the sort of $18 to $19 range. Now, with the 50-day EMA set at $18.50, we can see silver moving between this figure and $19.50 this coming week, with an attempt at least to try and touch $20. We're not convinced at the moment it would quite reach there, but anything can happen. Now, much therefore depends, though, on the US dollar value and whether it recovers some strength, as well as the coronavirus figures and whether they continue to deteriorate. Now, this coming week has some announcements, though not major ones. On Monday, there's nothing actually scheduled, nothing of note at least. Tuesday, Chicago Fed National Activity Index for June, and Wednesday, existing home sales for June. That'll be picked up a little by the media. Thursday, weekly jobless claims, perhaps the most important information, and leading economic indicators for June. And then on Friday, which will also attract some attention, the market manufacturing flash PMI for July, the market services flash PMI for July, and new home sales for June. So limited data until really the end of the week, particularly Friday. So we're therefore faced with an interesting scenario next week. We have a backdrop of relatively good financial data. The European Central Bank left rates unchanged and reduced the momentum on its bond buying, or QE for the want of a better name, and it appears unlikely that the Fed will do much to its rates later this month on the 29th of July, though it might only be less than 2 weeks away. A lot can happen in that time. So a positive backdrop against rising coronavirus cases in the US and certain other countries around the world, and some upticks in deaths along with it. Equity markets have managed to remain firm, primarily because of hoped-for additional stimulus measures and what could be a relatively early announcement on infrastructure spend, although President Trump is running out of time, having said that. Meanwhile, the US dollar is devaluing, albeit slowly, thereby acting as a tailwind for precious metal prices and silver at the moment in particular for the reasons previously mentioned. Now, next week we're expecting to see a slight degree of consolidation, and with silver attempting at least to aim for that $20 level and gold for $18.50, though we have more confidence in silver being that successful than gold at this current moment. Now, that said, again, geopolitical and COVID-related issues will dominate what actually happens, with far more interesting economic data being revealed in the last week of July, and which we believe will have more significance for prices. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting we update our Richard and Greg channel every few days, and if you haven't done so, please subscribe to that one too. We trust and hope, as always, that you have an enjoyable and safe weekend and prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.